This is the daily fiscal pulse for the 2nd of July, 2026. We're looking back one trading day, capturing how fiscal flows moved through the close on Thursday. Before we dig into the numbers, let's acknowledge what's making noise in the headlines. There's no clear dominant narrative emerging at the moment. The buzz around things like an AI Alexander Hamilton experience at Boston's new Finance Museum is what's capturing attention, and that sentiment is naturally working its way into trading dynamics. With that context set, let's examine what the actual fiscal data is telling us. We're looking at a solid spending day here. The flows show net transfers hitting $34.2 billion, with household transfers doing the heavy lifting at $26.9 billion. That's substantial liquidity entering the system in a single day. Here's what's interesting. The market is moving higher despite these fiscal headwinds. ES futures finished at 7,526, trading above the 20-day moving average of 7,465. The 20-day range extends roughly 364 points. Price action remains resilient even as fiscal dynamics push the other direction. Looking at the pace over a shorter timeframe reveals something noteworthy. Government spending is averaging $34.7 billion daily over the last 5 days. Stretch that out to 20 days, and the average drops to $5.9 billion. That's considerably more cash flowing through households and into the broader market ecosystem. Year over year, the picture stays consistent. We're at $1,225.4 billion for the fiscal year to date, which runs about 8% below last year's comparable period. That represents a meaningful pullback in the fiscal support available to the system. Looking at market positioning and conditions, the fiscal backdrop isn't providing a decisive edge right now. Our conditions gauge sits at -12. Historical precedent is worth considering here. We've observed similar setups numerous times in the past, and even with lighter liquidity, the S&P has averaged roughly positive 0.8% in the month that follows. Markets and liquidity don't move in lockstep. Price can and frequently does grind higher independently. The positioning picture adds nuance. Leveraged funds are continuing to add long exposure while margin debt is resting at the 100th percentile. That's elevated territory. Historically, those kinds of levels function more as a caution than a catalyst. There are a couple of items on the calendar worth watching. The 8th of July brings the SSA payment cycle on the second Wednesday, which typically reshuffles near-term flow patterns. Beyond that, the next significant Treasury coupon interest payment window lands around the 15th of August. The fiscal signal remains ambiguous at this moment. The scheduled flows coming into the market over the next few days will be the determining factor in whether that changes. That's the state of play.